With a full V-shaped recovery by the markets after the initial phases of the pandemic, and markets now at all-time highs, one has to carefully tread and navigate through the increasingly rising tide. It is more crucial now to carefully choose opportunities still available for undervalued stocks. Using the principles of value investing as well as dollar cost averaging can be hugely advantageous during times like these. In this video, I'll discuss 3 different stocks that you can purchase in September 2020 which are still undervalued and present great opportunities for not only gaining profits but collecting a handsome dividend along the way. Get ready, you are now entering the Academy. September is typically a turbulent month for the stock markets, and this year is set to be no different, with the momentum of the past few months' rally showing signs of slowing down. For investors wondering what stocks to invest in, September is a time to be cautious, particularly when opening new positions. Economic activity has recovered more quickly than expected following the easing of COVID-19 lockdowns, but a resurgence in the pandemic is now leading to a stalling in that recovery, so investors may want to brace for a late summer dip. Without further ado, here are the 3 stocks that are still undervalued after the market collapsed in early 2020, and which still provide great opportunities for not only long-term gains, but significant dividend passive income along the way. For the first stock, we have AbbVie, ticker symbol ABBV. Drug manufacturer AbbVie is known for its blockbuster Humira, which treats rheumatoid arthritis and Crohn's disease among other conditions. With profit margins of at least 17% in each of the past 5 years and annual revenue rising from $20 billion in 2014 to $33.3 billion in 2019, AbbVie's business was already looking strong. But the Illinois-based healthcare company became an even bigger or better investment when it acquired Allergan, which makes Botox, in a massive $63 billion deal. A stronger and more diverse business model helps make prospects for its dividend even better. And that's key for a dividend aristocrat that's known for growing its payments over the years. Since spinning off from Abbott Labs in 2013, AbbVie has increased its dividend payments by 195%. Today, it pays investors a quarterly dividend of $1.18 for a yield of 5% annually. An $8,000 investment in AbbVie would bring investors $400 for the year, or $100 every 3 months. Its quarterly payments come every February, May, August, and November. Year-to-date, shares of AbbVie are up 6%, right in line with the S&P 500's returns. The second stock is Unilever, ticker symbol UL. Dutch company Unilever is another dividend aristocrat that's well diversified. From its food and refreshment products to home care to beauty and personal care, Unilever sells a wide range of goods to consumers. The company estimates that 2.5 billion people use its products every day. Some of its better-known brands include Ben & Jerry's, Knorr, Lipton, and Dove. In each of the past 5 years, Unilever's sales totaled more than 50 million euros, while its profit margin has held steady at 9% or better. The business is stable, and that's what makes it a reliable dividend stock to hang on to for years and years. Even during a recession or pandemic, consumers are going to continue buying Unilever products because they're essential to their everyday lives. However, because the company issues dividends in euros, there are some fluctuations for U.S. investors, collecting a payout as a result of foreign exchange. Today, the stock is yielding 3.1%, meaning investors will need to spend about $12,900 to earn $400 in recurring income every year. Unilever makes payments every March, June, September, and December. Shares of Unilever are up more than 4% in 2020. The final stock is Jpmorgan, ticker symbol JPM. Bank stocks are always great sources of dividend income, and that's why Jpmorgan Chase makes the list. The New York-based company and many of its peers are facing some challenges right now amid a recession and the COVID-19 pandemic. But over the long term, bank stocks are safe bets to continue doing well as long as the economy is strong. And that's what makes a top bank like Jpmorgan a fair, safe investment to hold on to. In each of the past 5 years, Jpmorgan has recorded a solid profit margin of at least 24% on revenue of more than $93 million in each of those years. That's a lot of cash on a regular basis. Although Jpmorgan is not an aristocrat, it's been increasing its dividend payments regularly since the end of the previous financial crisis. Annual payments of $3.30 in 2019 were more than 6 times the 53 cents that it paid out in 2009. With Jpmorgan stock down more than 25% year to date and its yield pushed up, now could be an opportune time to invest in one of the top financial companies in the country. Today, the bank pays out 90 cents every quarter to its shareholders with an annual basis yield of 3.6%. An investment of $11,100 would earn you $100 in quarterly payments. Jpmorgan pays investors a dividend every January, April, July, and October. By continuing to employ the simple strategies learned in the 10X Academy channel, which include value investing, dollar cost averaging, and dividend reinvestment, you can create a low-risk dividend income flow that will appreciate over time and continue to pay income continuously. Through careful planning and diligent investment of capital, as well as reinvestment of dividends, one can create a dividend income stream that can provide substantial income, eventually covering everyday expenditures and beyond. This video provided 3 stocks that are underappreciated as of September 2020 and can be added to any savvy investor's portfolio, providing not only capital gains opportunities, but also substantial dividend income along the way. If you'd like to pick up some of these stocks now, make sure to use the Webull stock trading app, which provides a great vehicle to purchase stocks commission-free, thus providing a great way to create and grow a dividend income portfolio using the methods mentioned previously. And if you register now and make your first deposit, you'll receive 2 free stocks that can be worth up to $1,600 each. So make sure you take advantage of this offer now. Be sure to check out the links in the description to get started in creating your very own passive income producing asset and start your path toward financial independence. Thank you for watching this video. If you enjoyed this video, don't forget to smash the like button. It will really help out the YouTube algorithm and bringing you more passive income and wealth creation strategy videos. And if you haven't done so already, be sure to subscribe to the 10X Academy. And don't forget to turn on the notification bell to be alerted on more passive income strategy videos. This is the 10X Academy.